Investors are holding their breath before the release of Nvidia's quarterly results that are due after the US closing bell today. Expectations are sky high and the market impact could be sizable. So, welcome. This is Swissco's Daily Market Talk. So the markets were calm yesterday. The European stocks extended gains while the S&P 500 and Nasdaq 100 consolidated a bit lower than their all-time high levels yesterday. A 69 billion US dollar sale of US 2-year debt went well. The US 2-year yield extended losses and the US dollar rebounded from the lowest levels of this year. Crude oil, which rallied to its 200-day moving average lately on mounting tensions in the Middle East and in Libya, failed to break offers at this level and fell nearly 2% as most traders brought the global growth concerns and also the sluggish Chinese recovery back on the table. As such, the barrel of US crude is to $76 per barrel level yesterday and is consolidating near that level this morning at the time I'm talking here. Now, we will probably have another calm trading session today as investors will not be willing to move mountains before they see the latest results from Nvidia that are due to be released today after the closing bell in the US. As such, well, today is probably the most important day of the week and the most important day of this earnings season because, well, it's Nvidia's earnings announcement day. Woohoo! So, Nvidia has a market weight of around 6% in the S&P 500. It accounted for a third of its gains this year and could actually move the market in either direction by big chunks. So the chart that I have shown you yesterday and I bring up again today shows the rolling 1 week impact of Nvidia on the returns of the S&P 500 index. And it gives you an idea on how much of the S&P 500's gains could actually be traced back to Nvidia alone. And it shows that Nvidia alone could eventually trigger a jump of more than 1% in the S&P 500. So the company's earnings announcement day is obviously and naturally a big day for the market and for the S&P 500 as well. So someone at Ameriprise even said that it will probably be more important for the market than the Fed President Jerome Powell's last week Jackson Hole speech. Now, of course, it is a bit exaggerated because Nvidia's earnings won't determine the cost of borrowing for, the US government or the US companies or the US households, but it will have a say, that's certain, when it comes to the sentiment regarding AI overall, and that's the biggest theme of the past year and a half, as you know, in the market, and the reason why we saw the S&P 500 index diverge so widely from its equal weight counterpart. Now, coming to Nvidia. The expectations for Nvidia's second quarter results are sky high, of course, in numbers. Well, Nvidia's own revenue forecast for last quarter is a whopping 28 billion US dollar worth of sales. And that's the double of the money that the company made a year ago, at the same time a year ago. And the market expectations are even higher than that. They range between 27 to 32 billion US dollar worth of sales. And the LSE Group's data, for example, suggests that sales at Nvidia may have grown by 75% in the second quarter of this year to 31.69 billion US dollars on persistently high spending from the big technology companies that actually make up to 40% of the Nvidia's revenue. And the strong TSM earnings that were reported earlier in this earnings season also hint that we could see another blowout quarter from Nvidia. And given that the company has consistently printed a 2 billion US dollar beat on its own forecast for the last 4 quarters, there is, actually reason to think that the 30 billion US dollar worth of sales is definitely within reach. But there are risks too, of course. The first one is that the higher the expectations, well, the harder they are to beat. And a number below the $30 billion US mark for sales could eventually disappoint more than one investor, even though the average expectation for sales is less than that. It's about 28 and something billion US dollars. Second, Nvidia had to delay the launch of its next generation Blackwell chip due to some issues in design and in manufacturing. And even though the company has enough of these popular chips in hand to sell, the delay of the Blackwell chips could eventually alter the company's own predictions for the quarters ahead, and that could eventually discourage some investors out there. Third, Nvidia faces rising competition from the likes of AMD, Qualcomm, and Intel, for example, although Intel is well behind the curve, and this rising competition will start eating into the company's, for now, comfortable profit margin sooner rather than later. Therefore, investors will also have a close look to this point in the earnings. And finally, we can't really ignore the mounting worries regarding the big technology companies' massive, huge AI spending that has not improved these companies' profitability just yet, except at Meta, where the CEO Mark Zuckerberg managed to convince its investors that AI is actually having a positive impact on its advertisement revenue. Other companies like Google and likes, investors are frustrated regarding the return on their AI investments, both regarding the timing that they will start seeing the results and the size of the benefits on profitability. Now, even though the big technology companies have enough cash on hand to increase their capital expenditure on AI, and they actually insist that they would rather overspend on AI than risk jeopardizing their dominant position in the technology sector. If investors start pulling out their money, these companies may be forced to scale back their AI spending plans, which could pose a risk for AI enablers like Nvidia. But anyway, after the year and a half that we just spent, and based on the data and numbers and the information available to us today, it is obviously very hard to give a bad call for Nvidia. Nvidia is up by 167% since the year started and up by 786% since last year started. Its PE ratio is just below 75 before the earnings. So at the current high valuations, everything from numbers to the guidance should look absolutely fantastic to send the stock price to new record levels. Now, it is not impossible, but we always keep in mind that bad news arrives when you least expect it. And if there is a market correction, it could be a sizable one. In all cases, we expect some decent post-earnings volatility after Nvidia earnings. Based on options pricing, the stock could move around 10% up or 10% down after the results. And when you think that Nvidia is capable of moving the S&P 500 by 1%, it will have a say for the overall market sentiment for the next few sessions, at least until the next US jobs report. Now, elsewhere, still inside tech, Super Microcomputer had a rough start to the week, to say the least, on news that Hindenburg Research, that you probably heard before, is a company that investigates and publishes reports on publicly traded companies that it believes are overvalued or engaged in fraudulent or unethical practices. They said that they found glaring accounting red flags, evidence of undisclosed related party transactions, sanctions and export control failures, and also customer issues. Ouch. But anyway, all eyes and all ears will be on Nvidia earnings for the next few hours, happily for them. So we are holding our breath and wish good luck to Nvidia and of course its investors as well. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow after the Nvidia earnings. And until then, good day trading.